You know, I would find myself sitting in a client's office and I would say the most important thing is controlling risk. And 5 minutes later, I'd say the most important thing is buying cheap. And 5 minutes later, I'd say the most important thing is knowing where we stand in the cycle or something like that. So I wrote this, first a memo around 2002-03 called The Most Important Thing, and then this book.
Business Therapy summarized that investing is difficult. Howard Marks is not writing to make it easier for individuals to invest. Instead, they want to demonstrate how tough it is to handle so many things at the same time. They feel that if individuals truly grasp the complexities of investing, they would avoid doing it themselves.
You know, there are so many things that you have to juggle at the same time to be a good investor that I wanted to share that with people, you know?
Business Therapy summarized that investing is not simple. According to Howard Marks, investing is a difficult activity that demands a great deal of effort and talent. They believe that making it appear easy will do people a disservice, since they will not realize the true effort needed.
And I think I said in the introduction that I am not writing to make investing easy. I would rather write to show how hard it is, because there are so many things that have to be juggled simultaneously. But if you take an area like investing and you try to make it seem easy, you're really doing people a disservice. If we said to people, you know, if you really spent some time on it, you could do your own dentistry or your own legal work or fix your own car, you know, we wouldn't be doing people a favor. And the same is true with investing. For some reason, while nobody does their own dentistry or auto repairs, everybody thinks they can be an investor. And if they're going to try, I'm at least going to give them some of the considerations. So one of the things in that 21 was knowing where we stand in the cycle. Now I think there are two, among the 21 most important things, I think two are really the most important, except for the others.
Business Therapy summarized that risk management is critical. One of the most crucial components of investing is risk management. Howard Marks believes that risk management is the hallmark of a skilled investor and that everyone can profit when the market rises. A superior investor, on the other hand, achieves returns in good times while keeping risk under control.
And they are, number one, risk and controlling risk, because I think that controlling risk is the mark of a professional. Anybody can make money when the market goes up, and most of the time the market goes up. And anybody who takes above average risk can do above average when the market rises. So achieving returns is not a point of distinction in good times. In my opinion, the distinction of a superior investor is achieving returns in good times with the risk under control. Because you never know when the environment is going to shift from favorable to unfavorable, and the question is, are you prepared? You know, somebody who, if the market's up 10 and you're up 12 and the market's down 10 and you're down 12, you didn't accomplish anything. The question is, can you make more in the good times than you give back in the bad times?
Business Therapy summarized that understanding the market cycle in relation to the present. To comprehend the probability distribution that regulates the future, we must first comprehend the present and where we are in it, specifically where the market stands in relation to its cycle. It is impossible to predict the future, but people who view the world more clearly than others can have a better understanding of the probability distribution that regulates the future, including what occurrences are likely and which are unlikely. Understanding the present can so assist us in making better investing selections.
And then I think the other thing that's most important is the cycle and where we stand in it. I don't believe in predicting the future. We never know where we're going. We should understand the present. And where we are in the present, where the market is relative to its cycle, tells you something about the odds that govern the future. Doesn't tell you what's going to happen tomorrow, but I believe that we can only understand, since the world is an uncertain place filled with randomness, we can't know what's going to happen in the future. But those of us who see the world more clearly than others can have a superior understanding for the probability distribution that governs the future. What things can happen, which are most likely, which are somewhat likely, which are unlikely. If you have that consistently, you are a superior understander, and you can be a superior investor. So I think the question is, what today is the probability distribution that governs the future? And one of the things I say in the book, which I'm happy with, is that
Business Therapy summarized that investment returns as a bowl of lotto tickets. The performance of investments can be compared to a bowl full of lottery tickets. Investment performance is unclear, and it is impossible to anticipate the future, just as you never know which tickets will be chosen. However, better investment decisions can be made by understanding the probability distribution that governs the future, especially when the bowl has 70% winning tickets and 30% losing tickets. When the odds are in your favor, investing significantly in aggressive securities can help optimize returns.
the future, investment performance in particular, for me, is like a bowl full of lottery tickets. You never know which ticket's going to be chosen. Sometimes the bowl has 70% winning tickets and 30% losing tickets. Sometimes it has 70% losing tickets and 30% winning tickets. Wouldn't it be nice to know the difference? I think it's possible. But you want it, when it's 70% winners and 30% losers, you want to go all in. You want to invest heavily in aggressive securities. And you reach into the bowl, or maybe the gods of fate reach into the bowl and they pull out a ticket and it's a loser. So, you know, as my best friend Bruce Newberg says out in California when we play backgammon, which is a game that's dominated by dice, there are probabilities and outcomes. We can get the probabilities on our side. That does not ensure a favorable outcome, but it's the only thing we can try to do so. And that's what the book is all about.